So to summarize what we've spoken about, as Americans live longer, guaranteed retirement benefits and pensions continue to disappear, and it becomes increasingly difficult to find safe places to save money. The guaranteed benefit of Social Security and the potential lifetime benefit it can provide is more important than ever before. Also, because of how professors now save a majority of their retirement assets in tax-deferred accounts, the added cash flow and flexibility of Social Security is a valuable tool to help professors avoid the common mistakes made by their peers. Time is also of the essence. Some of the claiming strategies that give you the most flexibility and the largest lifetime benefit will be going away after April 29th. So it's important to carefully review your claiming options and develop a claiming strategy as soon as possible. With that in mind, Scott, what are some specific action steps that our listeners should be thinking about in 2016?
Well, I think for one, James, you need to review your income needs in retirement, and keep in mind that could be drastically different. Your income needs now versus retirement could be more, could be less. Secondly, assess your current level of savings. Are you saving enough, or do you need to look at strategies to increase that level of savings? You'll then want to prioritize what is important to your family and your situation. James mentioned goals of retirement savings, cash balance, replacing lost benefits, and you really determine if you can meet those goals with the current resources, or perhaps can you use Social Security to help with some of this. Then you want to obtain your most recent Social Security benefits statements. If you haven't perhaps saved those that have been mailed to you recently, you can go online and create an account so you can retrieve this at any time. The website is ssa.gov/myaccount. And you'll not only want to review your benefit amounts in retirement, you'll also want to take a look at the history of income that Social Security has for your record. Make sure that that's accurate, because that is going to impact your benefit. You then want to determine how Social Security benefits can help you reach those overall goals. And again, if this all seems like perhaps a little bit too much, make sure you seek the advice of an unbiased advisor. And James will highlight an offer that we have for today's participants.
Thanks again, Scott. Really some great insight today. So we'll be taking your questions in a minute or two, so please continue to type them into the chat window while I'm talking. And again, you can access the chat window by hovering over the chat icon at the top of the screen. When it does, you can click on the chat button and a chat window will appear over the right of your screen. At some point, whether or not you fully retire from the university, you will be responsible for producing your own income and managing and preserving your assets so they last as long as you need them during retirement. With current market conditions and investment challenges and the lack of guaranteed retirement benefits awaiting you, have you done enough planning to ensure that you don't make any big mistakes? More importantly, are you someone who should take advantage of one of the claiming strategies, such as file and suspend, that will be eliminated after April? We can help you answer these and more questions with today's special offer, the Social Security Maximization Consultation. This consultation will compare your personal financial situation to the risks and opportunities in regards to the different claiming strategies that we've spoken about, and recommend specific things that you can do to achieve greater preservation of your retirement savings and make sure that you don't make any big mistakes. It will also help you determine which action steps are most appropriate for your own situation. It can be held in person or over the phone, so it's very convenient. The offer expires this Monday, February 15th, so there's a limited time to respond, and we set the short deadline in order for you to take advantage of some of the claiming strategies as soon as possible before the April deadline. If you're interested, please type the word maximize followed by your name into the chat window, or you can call us at 1-800-431-9740. For our listeners that are already Philbrandt & Company clients, these are steps that we're taking with your situation. However, if you have specific questions, please contact us and your advisor will set up a time to address them with you. Another offer that we have for webinar participants is a Social Security report. It's a written supplement to today's webinar. This report, written by today's speaker, Scott Kornstedt, highlights some of the common misconceptions about Social Security and claiming strategies you should be aware of that can provide the greatest overall benefit for your retirement. If you're interested in learning more about important Social Security claiming ideas, you can request this report. by typing report followed by your name into the chat window, and we'll send you a copy of it. Finally, if you like today's webinar, we will be visiting a number of campuses this spring and hosting personal financial planning consultations covering a wide range of topics from Social Security planning to retirement income planning to long-term care. If you'd like to speak with an advisor during one of our upcoming campus visits, type meeting followed by your name into the chat window. And again, to respond to this or any of the preceding offers, you may call us at 1-800-431-9740. And now we'll address your questions. Please keep in mind that we may not be able to address every question due to time constraints. So if we don't answer your question today, we will follow up with you through email or over the phone. Our first question, Scott is asking, can somebody restrict their Social Security claim to spousal benefits only at age 62 and then switch to their own full retirement benefit at age 66? So it sounds kind of like the restricted application that we talked about, just at an earlier age.
Yeah, that's a good question, James. Unfortunately, no. If you want to restrict, a claim to spousal benefits only, you do need to wait until your full retirement age to do that. So that'd be, for most of our listeners, the age of 66. If you claim benefits before your full retirement age, you must collect the largest benefit, basically to which you're entitled. The benefit is then permanently reduced. Social Security calls this deeming. So, yeah, short answer is no. The long answer is probably best to wait until 66.
Scott, our next question refers back to one of the case studies that we looked at with Bob, where he filed and suspended. If he did need to tap into that money at age 69, like we had in our example, would that then lower his ongoing Social Security benefit back to the age 66 amount, or would it be at a higher amount?
It would go back to the age 66 amounts. So you get that lump sum based on that, but then there would also be the calculation of any cost of living adjustments that would have happened between 66 and 69. So it'll be a little bit higher than the 66 benefits, but yes, that is the, I guess, a disadvantage, if you will, of that plan. So you're going to be starting your benefit based on that previous amount.
All right, the next question we have, they're asking, I filed and suspended my benefits so that my wife could collect spousal benefits. Can I now restrict my claim to spousal benefits only and collect half of her benefits? So it's kind of a double restricted application on each other.
Yeah, and it kind of sounds like someone wants to have their cake and eat it too, so to speak. But unfortunately, no. You're only entitled to one claiming strategy at a time. The husband or the person in this case has made their election, the file and suspend election, so you cannot claim a second time for restricted benefits. So only one claiming strategy at any one given time.
All right, thanks, Scott. The next question that we have is, can I file and suspend at age 62 so that my wife can receive her spousal benefit?
No. Again, the file and suspend only works at your full retirement age.
So you'd have to wait till age 66 for most people, or the additional age up to age 67 that you talked about?
Correct.
All right. So our final question that we have this evening is, if I defer my benefit until age 70, can my spouse then receive half of that maximized benefit?
Unfortunately, no. The maximum spousal benefits is based on 50% of the other spouse's full retirement age benefits. So basically, spousal benefits do not receive any, do not earn any delayed retirement credits. I also saw one question come through, James, on how long before you wanting to receive these benefits should you contact the Social Security office. I think especially if you fit into some of the grandfathered parameters. If you're going to be 66 before the end of April, don't wait until that week of April 25th. You'll probably want to go much earlier than that. But as far as in general, I think 6 weeks to 2 months before, I think is a good time frame, just so you can ensure you have everything lined up and you're receiving the benefit the way that you want to.
All right, thank you, Scott, and thanks again for all the information you shared with us. Thanks to all of our listeners who participated today, and we look forward to seeing you again at our next event in March.